Hi everyone, welcome to a new episode of Crypto Tips. What you are about to watch is a clip of an example of one of the classes that we hold exclusively for our CT Club members. This particular class goes over how to form an investment plan specifically involving cryptocurrencies. If you're new to investing, if you're new to cryptocurrencies, this is a great class for you to check out. And this video is showing you just one example of a topic that we covered within that class. The whole class itself is about an hour long, and if you join the CT Club, which is our paid membership group on Patreon, a link to that is down below in the video description. If you join that membership, you'll instantly have access to, I think, 10 other classes that are also about an hour long. It's all exclusive content just for the CT Club members.
And our portfolio and all these trade updates.
Trade alerts, portfolio updates, these classes, and a cool community to be involved in.
Almost 2,000 people.
It's pretty cool.
Yeah.
So anyway, that's what you're in for in today's video, so let's check it out.
So, risk reward comes in many different forms, all right? So you can have a risk reward of like traditional investing. And traditional investing, that usually will, on average, probably earn you, 15% maybe, 20% if you're lucky. If you were in some of the FANG stocks, you would have maybe gain 100% or something like that. So, but with crypto, we know that this is an evolving market. We are in a price discovery phase. So, we know that Bitcoin will continue to rise in price. So, here's the risk reward that a lot of people don't talk about. Is like, okay, I'm going to put most of my money into stocks, but I'm going to only put a little bit of money into Bitcoin. Well, that risk-reward ratio is kind of off because stocks are at an all-time high. And Bitcoin, even though it's an all-time high, I mean, we're at a $1.3 trillion overall market cap. The stocks are way beyond that, like ridiculously beyond that. So, there's more risk in stocks than there are in solid crypto projects. And not only that, but we know how many of these, like Bitcoin, we know that there will only be 21 million. This is an inelastic supply. You don't know how many stock certificates that these companies are going to come out with. Look what happened with like AMC and GameStop and all those other ones. So you're screwed if you're holding on to that, So just be careful.
So basically, if you're comparing the market cap of cryptocurrency markets compared to something like the stock market, there's a higher risk-reward ratio with crypto just because of the potential growth there. If you're comparing the market caps between the two, you're going to capture a lot more profits with cryptocurrencies than with stocks, or at least easier with crypto. It's more prevalent in cryptocurrencies than with stocks.
And I think that Bert agrees as well.
Yeah, he's saying amen. Okay.
Yeah.
But so basically, if you're thinking of your age and what is more risky, what is less risky within the cryptocurrency space, obviously less risky is Bitcoin. Investing in Bitcoin. And at the end of this class, we're going to go through actually the methods of investing in cryptocurrency from least risky to most risky. So again, depending on how you fall within these categories that we're listing right now, that can help you determine how much of your portfolio you allocate towards the least risky options and how much you're allocating towards the more risky options.